Hi, welcome to REMAX of Boulder's video podcast. Duane Duggan here, and today I have Jessica Shanahan. Jessica is with Premier Lending, and she's a loan originator there. Our topic today is writing winning offers from the lending point of view. We have a very hot market in Boulder, Colorado, so there's often, especially first-time buyers, that have a tough time getting an offer accepted if they have to get a loan. So Jessica's been around the block a time or two, so she has a few ideas on what some of those buyers have done in order to compete with lots of times cash offers.
Right.
Welcome, Jessica. Thanks for being here today.
Thanks, Duane. Thanks for having me. So yeah, absolutely. Super hot market, and you are competing with cash offers all across the board. And so something that's been successful recently, I've just heard from, other agents that I do business with, is they've started asking the question, do you have a wealthy relative that you can just borrow this money from? And, a lot of times when you're putting 5 or just 10% down, or perhaps even have an FHA loan, it's nice to go in and say, actually, no, I'm a cash buyer, and then have that money come from your relative.
Right.
Down the road, right, you're going to refinance that into your own mortgage, but just to win the offer and win your dream home, that's what they're doing.
It's pretty tough out there. I teach a class called Writing Winning Offers, and I always like to poll the students, and the last class I taught, one of the agents said they competed against 70 offers. Makes it very tough for somebody that's not being cash. So, so anyway, if they do have a relative that has enabled them to use their cash to buy the house, what happens then? How do they pay the relative back, or what's the best way to do that?
Sure. So the best way to do it is actually record your own note and deed with that relative. So have that in hand, right? So that when you are going through the refinance process and you're putting your own mortgage on this property, that way you won't get hit with any higher rate because it's a cash out. It will be a rate and term refinance because you're paying off the current loan, basically. But aside from that, we don't have to source the funds from the relative or anything else. We're just paying off that recorded note and deed.
Okay, that sounds good. And it'd probably be best if that relative hired an attorney to make sure they're complying with all the rules relative to owner financing and such, and just making sure it's a good note and deed of trust. So,
yeah, absolutely.
One of the things that I've heard, and I know some lenders, it's a little bit higher interest rate on a cash out refinance as opposed to the purchase. So how does that work? Is that true? Or?
Yeah, and that absolutely is true. That's why I would just say, have the forethought to record that note and deed so that we're not just pulling out cash to pay your relative.
Gotcha. So that's the difference. So that's a critical aspect there. Okay.
Yep.
What about other ideas that you've seen other agents do to get a winning offer accepted from a lending point of view? Yeah.
So maybe even if your relative can't afford to give you the full amount for that property, just increasing down payment. So going from 3, 5, 10% down to 20% down or 30% down. I think, as you know, sellers love to see a larger down payment.
It makes them feel a little more comfortable.
Yeah.
So if a relative is able to lend the buyer a down payment, what kind of documentation is it? Do you still need a gift letter or proof of funds, or what's all the current rules with that?
Sure. So Premier Lending, we ask for a gift letter. I can speak to us specifically. We broker direct to Fannie and Freddie, and so we don't need to show proof of funds. If your mom doesn't really want you to know how much money she has in her bank account but is willing to give you the money, then we only need a gift letter from her. We don't have to go back and source where that money came from, which has been really fantastic. Makes the process a lot easier on some buyers, for sure.
And is there anything in particular that gift letter needs to say? Is it like a 5-paragraph letter, or is it just a 1 or 2 sentence letter?
It's a super simple 1-page letter, and we have one. Typically, if I know they're going to be getting a gift, I just send it out to them, and it's like a signature and an address, basically. I mean, it's really basic.
Okay.
Yeah.
So if somebody wants to do a non-contingent offer, but they have a house to sell, what are the options as far as programs available to pull that equity out of the old residents before they make an offer?
Right. So there's a few different ways to go about it. If the home has been listed recently, then you're going to have to do a line of credit on your current residence. Take that equity, put that towards the down payment on the next place. Or option, if it hasn't been listed, to do a bridge loan, take that, put that towards down payment. Or, you and I were talking earlier, and a great way to do it if you know you're going to be buying a new place in like 6 months is just to do a cash out refinance. Take that cash out, the equity out of your home, stick it in the bank. 6 months later, put that towards down payment.
Okay. And how's all the qualifying work as far as bridge loans? You've got your old house payment, the bridge loan, which sometimes they might be interest only or accrue, so you might explain that. And then the new house payment, you got to qualify for that whole stack. So
right.
Some people have a tough time qualifying for that whole package.
That's a great point. Sometimes they do have a tough time qualifying for that. We can offset some of that if we did, like if they wanted to maybe rent their current residence,
okay.
We could, or their departure residence, right?
Okay.
We could have them rent that and then offset the payment that way. But I mean, you're right. It's typically going to be an interest only payment on the bridge loan or the HELOC or whatever they decide to do. But that is going to be a lower payment for the first 10 years at least.
Okay.
But yeah, if there's a problem qualifying because of too much debt, then it would be great to offset that by renting the departure residence.
Okay, and I remember a rule in the past about in order to allow rent to be tossed into the income stack, if you will, for qualifying, you had to have 75% loan to value. Is that still true today, or has that changed?
So Fannie's pretty much eliminated that, which is nice. We do have the ability to go Fannie Direct, so that's an option. But you're right, in other instances it's going to be 25% equity in the home. We don't need an appraisal for that. We show it with a CMA, comparative market analysis, and that's something that we can pull, and it's not an additional cost to the client at all.
Okay, and then once the lender knows the rent amount, let's say it was $1,000, do they apply that whole $1,000 to the income stack, or is there another formula for that?
Great question. We use 75% of that.
Okay.
And we show it with a lease and then a security deposit.
Perfect.
Yeah.
Okay. Any other ideas that you can think of that have helped some of your clients in the past? Or?
Yeah, so just one more idea is just being really competitive on your deadlines. If I have a complete file on a client, then I've worked with the agent really closely. Like I wouldn't do it for anyone, right? But if I have a complete file to really tighten up those deadlines, we've been able to shorten contract times from like 30 to 21 day close. So being competitive in that aspect helps a lot as well.
And so nothing's really new as far as if the buyer gets in and gets pre-approved, except for waiting for the appraisal maybe for the house. That helps you speed things.
Yeah.
And then we've had, several months now with TRID in effect. It's such a thing of the past now. I forget when it started. But how has that affected closing times? Has Premier been able to deal with that pretty good as far as not creating big delays?
Yeah. So far we've actually met every single deadline. We haven't had to move one closing because of anything with TRID. So that's been really fantastic.
Perfect.
Yeah.
I just remember all the hoopla about it, how bad it was going to be. It all has worked out.
You're so right. Yeah, it's old news now. Yeah.
Jessica, thanks for being here today.
Thanks, Duane. I appreciate it.
Appreciate all you do for our buyers. So,
Yeah.
Duane Duggan, Remax Boulder Video Podcast, signing off.